Hello, everyone. Be starting in just a minute or so. Hope you guys are all good. Eduardo, nice to see you as usual. DP says I missed you. So yeah, I'm fine. I just needed a break. So hey, Konstantinos, nice to meet you. John, good to see you as usual. I was wondering where you were. I was worried. John shows up on every one of our webinars. So thanks for that, John. Hello, Marky Mark. Hey, Mark, how you doing, man? All right, so why don't we get started? We're on the nose. Welcome to the second of the three-day live trade execution webinar series. So this is live. The markets are closed, but this is live. My name is Mark Shawson, the Pattern Trader. Yesterday, I started talking about my four-step trading methodology that is entirely based on price. To me, price is a discounting mechanism. Price is ahead of the news. Amateurs trade stories, price is the only truth. And, you know, we saw that really today where the market rallied pretty hard. I got pretty long the S&P. I got long bonds. I got long stocks. Now, you know, right now we have a pretty bad background. People are talking about recession and rates going higher and inflation and everything seems bad. But price is telling me something else. So I try and surrender to the will of the market. And so what I mean by, you know, amateurs trade stories. So I don't know if you guys watch this show called Shark Tank. There's a guy named Mr. Wonderful, Kevin O'Leary. He's also, you know, is always on CNBC, you know, talking about his ideas, his investment ideas. And everyone is wrong. I mean, I remember I was short Zoom at around $268. It was right before the earnings. And he was telling us how you have to think of Zoom as a new telco. It's a new paradigm. It's a new way of thinking. And I was short the stock and it was at $270. And today the stock's at $70. He was touting Coinbase at $180. This is a new way of brokerage, a new way of thinking. He was also a big investor in FTX that just went bankrupt. So people think in terms of stories. And so it takes a little bit of imagination, but price is the only truth. So I talked about, you know, my four-step trading methodology, kind of identify the phase or the market trend. If there's no trend, try and identify a chart pattern that is governing the direction of prices, then wait for what I call an insurance bar in the form of a key reversal or an inside bar. And then once you've kind of got all of that subjective analysis, then I try and have the market confirm what I'm looking at, where I own, you know, I put a buy stop above something I want to buy or sell stop below something I want to sell. I also talked about this concept yesterday of only trading within the first 15 minutes of after the market is opened or the first 15 minutes before the close. So within the first 15 minutes of the market, I bought CRM, which is Salesforce, around 144, 145 bucks. It closed at 149. And then on the close, based on, you know, what I thought was a good looking close, I bought some Qualcomm call options. So I did something either on the opening and then I did something on the close. And in between today, I made probably over 100 grand. So these are my trades, right? So this is not a demo account. This is an institutional broker. And you can see that I'm long 8,000 shares of CRM, Salesforce, and it was up almost $4 today. So 8 times 4 is about 32 grand. And you can see that, I put quite a bit of money into this idea. And I got pretty excited about this idea, and I thought it was a very low risk trade. So I piled a whole bunch of money in there. And then in addition to the shares, I also bought some options. So I bought the 147 call options this morning when the stock was about 144. And I think I paid $1 and they closed at a 268. So I made, 2.5 times my money in a day. I'm also long these HYG. HYG is high yield corporate bonds. And this had a nice move today. I bought this, I bought these the other day, the 74.50, and now it's in the money. It's trading at 74.70. You can see these HYG. So now they're in the money. Anything over 74.50 is in the money. And then, like I said, this is what I did right on the close. I bought these Qualcomm call options for next week. So we'll see how that goes. Bought them at 90 cents for the $127 for next week. And then I'm also long the S&P. So I had triple this amount, and I got out of some at 2.5 times of what I paid for it. So I made about 250% on this. So I'll show you today. Here I bought some S&P call options yesterday, the 399s. Today the S&P closed at 400. So I bought these things at $1.14, and you can see I unloaded some at 245. So I made 250% on my money in a day. And then you can see these are the CRM, the Salesforce call options that I bought just today at $1, and right now they're trading at $3. So I'm making 300% on my investment that I just opened today. So, this is how I use the markets. And wherever they're going, I'm just looking to get in sync with that, and you can see in my cash account, my FX account, I'm long some Dow Jones, whatever, the cash. These are the Dow Jones. Then I'm also long some pound versus Australian. And then I'm also long some dollar yen. And so that's what it looks like in my account here. So kind of not sure where to start. I talked yesterday and showed you how I sent out an email over the weekend. And, in my email, I said, you should buy Home Depot at 317. And you can see that Home Depot closed at $325 today. So between, yesterday and today, you would have been up $7 on that call. And I laid out, the technical case, the price action that I was looking at, why I was looking at it, the inside bar, the whole thing. I kind of described what I was looking at. I said, Home Depot appears to have formed a significant double bottom along a long-term support line. Penetration above the weekly inside bar and close above the neckline will likely result in continued momentum to the upside. So you would have been clicked into this at 317, and right now it's at 325. So this is the work we do for our members, and that's what I look at. So I'll do a quick analysis of the overall market. Somebody asked for that yesterday, and then I'll kind of share with you why I was kind of excited about buying CRM when it looked pretty bad this morning. So what I've done is I've put on the top the Dow Jones, in the middle is the S&P 500, and then on the very bottom is the triple Qs. This is the NASDAQ. So these are the three major indexes in the United States. And you can see that there's quite a disparity. So, whereas, for many years, all you had to do was buy any stock and it didn't matter. A rising tide, lifted all boats. you could kind of close your eyes and buy anything. Now it's much more difficult. Now it's a stock picker's market. It's a market of stocks. It's not a stock market. You can see that the Dow has been going up. The Dow is up about 15, 18% in the last couple of weeks, and it's pretty close to its all-time highs. Whereas the NASDAQ is still like whatever, 30, 40% below the lows, and it's kind of trading right at the low of the year. So you can see this is the disparity between value stocks now and growth stocks. When interest rates start going higher, it just starts exposing that companies with no earnings are going to get fried, and companies with good earnings like Home Depot and McDonald's are going to be much more valued in the market. So you can see that that's a very, different picture. So again, these are three different markets. You have to trade them all differently. The NASDAQ is not the Dow, and the Dow is not the NASDAQ. So you can see that the Dow is starting to sneak out the top of this channel and starting to look like it's, gonna break out, and who knows where it's going to go. So there's some meaningful resistance like right here. And then this is the guy that I'm watching out for right here. You can see there was a key reversal there. And so about this level, which is probably about, around the 35,000. So about another 1,000 points north of here, we should start incurring some turbulence. But, I have to be open to the fact that this thing could continue. So again, I thought that the markets were going to break a lot south, and we'll see. I think that the markets just continue to go higher through the end of 2020. What are we, 2022? And then we'll see what happens next year. I got a feeling that, we've got one of these next year, but, we'll see what happens. And then the S&P has got its own kind of funnel here, where it's got a downward looking megaphone. And you can see that I think that it makes it to about the 4,200 level. There's an area on the chart right here that I'm kind of looking at that I think that this somehow gets here, that it gets to about 4,200. And then I think we're going to have another wave lower, but I don't know. I don't know. Right now I'm long and I'm following the momentum. You can see that there was kind of a sneaky little bottom in here, and the market's been going higher. And I still think it's going to bang into this upside roof before it hits any resistance. So I think it's got at least another 100, 200 points left on the upside in the S&P. And then the NASDAQ is, the laggard. We're at the bottom of a channel, but you can see that we've kind of formed this bottom. And, who knows if this thing can catch further fire. But whatever it is, when you kind of drill down on the daily charts, these things look pretty bullish in the short term. So I got very long. I bought the S&P 500. I bought the bonds. I bought stocks. I bought anything that really wasn't nailed down in a market that's, still pretty bearish. So I just look at price patterns. And again, if you look at the Dow Jones, you can see right here was a nice looking price pattern in the form of this double bottom. Now, I put this strategy worksheet in the chat box, and you can check out the common patterns that I look for. And, again, if you just understand the pattern equals trajectory. So I always look for a governing pattern that then tells me, okay, I need to hop on board this. And you can see that we kind of got a funky looking double bottom right here in the S&P. And then, you have this price action, what I call this key reversal, where you made a new low, you close at the high, that kind of put a stake in the ground. Sometimes you see these bars and they just put a stake in the ground and they actually point to where they want to go. So the combination of that price action and that price pattern told me that this thing looks like it wants to go higher. So now, you've got this kind of double bottom, rounding bottom, inverted head and shoulders, and the path of least resistance is higher. So I bought call options, which is a bet on a market going higher yesterday. So you can see we've been in this uptrend. And then yesterday we had this like what I call inside narrow range bars. So when I see this coil, then I kind of look for, okay, is the energy going to break here or is it going to break there? And, what I look for is, what is the guiding pattern? What is the guiding direction? So I surmised we were going to go higher. So I started buying options right here yesterday at $1. And today they closed at $2.50. So, and now the NASDAQ is bringing up the rear, but it too looks like it's about to break through this neckline again. So neckline is simply a line that is drawn through the entirety of the pattern. And so you can see this is kind of bringing up the neckline, but we had a what I call a mini key reversal, where we went lower this morning and we closed right at the high of the day. Now, it's not a big key reversal. It's not like this, but it still closed at the high of the day. It still says that today, the buyers were in control on the close. And you can see we have these two little price reversals in the same area. So if you really kind of blow it up, it looks, even nicer. So I'm surmising that we're going to get a move out of here to the upside. So I started buying all these stocks on the close because it closed very favorably. And so I think it's just going to continue. So, I bought Qualcomm right on the close. And this is what I said. I either do something right at the beginning of the day or right at the end of the day. And everything in between is just gambling. So let me just kind of stop and see, if that analysis on the markets, if there were any questions before I kind of, move on here. So Tyrone says, so have we bottomed out? Probably for the next couple of weeks, Tyrone. I don't know if it's an ultimate bottom. I kind of think we go to 4,200 and then there's a big move down. But, you got to take one step at a time. I made six figures today on a day that, was not much of a day, but these markets are starting to look like they are bottoming. I'm starting to see patterns that indicate, this looks like, it could go on for a while. Maybe, but maybe not. This is Qualcomm. This is a weekly chart, so it's kind of funky. We've been in this huge downtrend. But, just like CRM, it's just amazing. A lot of these things. So look at this. Look at how these charts just intersect along a certain area. And there's just no magic how, these things bounce off. And at some point, you can see right at the low end here, we've got this double bottom. Market made a new low, bounce. Now we're trading above this neckline. And now we've got this weekly bottom. So if the market is bottomed, it's going to do what? It's going to find a way to go higher. Now, I don't know in what time frame. I don't know how high. But all I'm looking at is a pattern that indicates there's, a support here and that things are likely to go higher. So this is on the weekly chart. So once I kind of see something in the long term, and you've got this funky kind of falling wedge, if you will. So the next resistance in Qualcomm is about 130. And then if we start breaking out here, then we could, get some fireworks. But I just felt like, so that was the weekly. And then once I kind of see what's going on in the big, then I drill it down to the daily. And, I see a combination of an emerging pattern hasn't quite confirmed itself yet. Sometimes we see these patterns, we don't know if they're real or not. And all you can do is put a toe in the water and see if the market confirms. So, this is kind of what I'm looking at, where we've made this double bottom, we've kind of crossed this neckline. So it was a combination of seeing this pattern, but it was also these two guys right here that made a new low and closed on the high. And today we made a new low and closed right on the high. So when I see that this thing was closing strong, I just bought it on the close. So now let's see. I don't know, see what happens tomorrow. But, I just, eliminated all what was going on today, waited for this thing to resolve itself, waited for it to show its hand. And now, it's still got, some garbage to get through. It's still got these resistances. But I'm just really playing it for some momentum. I bought these call options, which, if I just get a couple of bucks my way, I could double or triple my money very quickly. So here's this downtrend line, and you can see this is about on the weekly and the daily, where this tripwire comes in, and either it's going to, come back here, or maybe we'll go that way. So, but, when we start seeing something that looks like a bottom, if something's bottomed, it's going to find a way to go higher. So I'm not questioning what the Fed's doing, what the, consequences of an interest rate strategy, and if there's a recession next year. I'm just looking at pattern and price. That's all I'm seeing. And I'm oblivious to anything else. It doesn't matter what this instrument is. I'm just buying pattern and price. And, I stuck my toe in the water. Let's see what happens. And then CRM was kind of it's a little bit more of a nuanced thing. I don't know if I'm going to be able to explain it. Sometimes you just get a feeling. And sometimes I just visualize how, if prices come together in a certain way. So, this is a combination of seeing certain things, although, if I point them out now, it's like hard to see. But I kind of looked at what was happening as well as what wasn't happening. And I'm not going to give away all of my secrets on this thing, but I look at markets in terms of energy, and I'll explain that a little bit. But you'll have to kind of sign up for my boiler room to really understand the way that works, and it's very, very key to trading. I think of markets as energy. Energy gets dispersed, and then it needs somewhere to go to just blow off steam. You just can't keep going straight down. So you can see, just like Qualcomm, it's just amazing how the market will intersect along a downtrend line enough times. Now, that in and of itself doesn't mean anything. I mean, if you trigger this thing, it could just collapse through here. So that in and of itself is, not really conclusive, but it's hard to explain. But first off, just like Qualcomm, I see this area where there's a double bottom. And then I watch how prices oscillate around the unchanged level. And what I mean by unchanged is that where something closes. So to me, it's very important where the energy comes from. So this is a weekly bar, this high-low close. This is, 1 week in time. And if the market opened, went higher and then collapsed, then I would look at it one way. But if it opens lower and then starts going through the previous bar's unchanged level, then I look at it another way. And so when I kind of saw this thing, so this is a very crowded area. And again, this is very nuanced. I really can't explain it all. When you kind of get into areas like this, prices just don't collapse through here. You know, it's very crowded in here. So I just had this feeling that prices were going lower and they weren't going to be able to go lower. And I just started buying the crap out of the stock today. Now, it's hard to see why, but there are many reasons. But you have the support line, you have this pattern, and then you had prices start going that way. Let me see. So there is what I'm talking about. You can see how you kind of opened lower. You opened down, went down, and now you're going through the previous bars unchanged. And to me, it's just the way that energy enters that bar was very critical. And I had a feeling that I could buy this thing down here with little to no risk. So I committed over 7 figures to that bet. And, you know, let's see how it turns out. But, you know, I think I got in at a point where I could take a look and see how it works out. Now, you know, there were a couple of things also happening on the daily where sometimes I look at an area and start visualizing, you know, is this a bottom? And so if it comes back down in the neighborhood of this to me is like the buy of the century. If I can buy it here and the bottom is really there, that means I'm buying it like at the bottom. And so if I can get in early, I can make a ton of money if I'm right and this thing is going to bottom. So it's kind of hard to explain all of this, but I think I got this thing close to the bottom. And this is also what we call a broadening bottom. You can see how when you look at these trend lines, they kind of go in opposite directions, and it's kind of a narrowing and then a broadening. And this is a broadening bottom. I mean, this could, look like this. So look, I got in right here this morning. So I don't think I'm going to lose money on this deal. And I could make a hell of a lot. And now you have this thing, what I call a key reversal. So you have this pattern. It's too early to tell. I mean, this thing would have to come here and go through this neckline at 165 to confirm that this really is a bottom. So, I tend to get in very early. And by getting in very early, my risk is very small. So I can take these little stabs in here and, kind of see how it does. So now you have this key reversal. You made a new low, close at the high. And so you have a combination. Now, this is very early. I mean, this could still crap out tomorrow and it could look like this. And then it's, it's game over. It's not what I thought it was. And we'll see what happens. But I don't think I'll lose money. I mean, I've already got $5 in this deal and I'm, triple my money on the options. So I hope there's some follow through tomorrow and, I'll unload some of this, into a nice follow through if it does that. Now, I do think that the market's gone straight down. I don't think it's going to go straight up. So there's some nuance to these things, but that's how I look at markets. Win, lose, or draw. I'm just looking at patterns and price action to start positioning myself where I can establish risk reward, correct parameters. So what I said to myself today, and I was watching this stock on the opening, and I said, if this thing kind of goes, so what happened was it started going lower this morning. And I said, if this thing turns up and starts going back through that unchanged level, the previous day's close, I'm just going to buy it. And as it hit unchanged, I bought it at 144, 145, and it closed, up here. So sometimes I'll just play around with these areas where I'll say, okay, I'm going to buy it there, and then I'm going to put my stop loss under the low. So now I've got a $2 risk to maybe make $30. So, to my mind, trading is all about risk. If you can dial in a trade where you've got a very small amount of risk for a much bigger upside, that's what trading is all about. Trading is not about being in and out of the market 10 times a day, trying to snatch, a dollar here and a dollar there. John Lee says, why only at the end and the start of the market? John Louis, that's because that, again, this is a key principle, Jean Louis. If you want to be disciplined and you don't want to be hostage to the noise, waiting till something closes. So waiting until the jury's in, waiting for it to, because this thing went down. So, you might have bought it today and then it looked really scary at the opening. So this is what it looks like on intraday trading. And I was watching this thing and I'm going, really, do I want to do this thing? It looks kind of crappy. So this is what happened. Let me kind of dial this down. So this was CRM in the morning. Goes higher and then it goes into a deep dive. So this was this morning. Goes higher and now it's in a deep dive. So now if you're watching this, you're saying, well, this is a freaking downtrend. So this is why I'm saying you can't look at these short-term charts and see, what's going on here. But what happened was, so I kind of said, look, this is where it kind of closed, on the daily. I said, if this thing goes down and starts coming back up through the close on the daily, I'm going to buy it. And that's where I bought it. Now I'm in it. But the point is, if you're watching this thing, going up and down and this and that, you can't make these objective decisions. Now I'm in this thing for, like, who knows, $5, $8, $10, $15, $30. I'm not trying to, get the next bar on the next 30-minute chart. So my objectives are much bigger, much, I want to take a big piece out of this stock. So I bought this thing on the opening, and if I missed it, I would wait till the close. And okay, if you miss, a few bucks, fine. But at least now the jury's in, I can see where it closed. I've got a key reversal, and now I can make a risk reward determination, and I'm in control. When you're trading during the day, it's random. It'll go 15 minutes up, 15 minutes, it'll crash. You'll be all over the place emotionally. And you may be able to make some good trades, but I'm trying to find trades where I can hop on board and take a major piece out of these trades. I'm not in it for a couple of bucks, one way or another. So it's all about the discipline, Jean-Louis. And to me, it took me 40 years to figure that out. So it's up to you to kind of refine what works for you. I kind of, know my demons. And I can look at, 15-minute charts, 4-hour charts. I can see everything, but then I'm trading too much. Then I'm losing objectivity. And then it gets into a very negative cycle. So the whole thing is to be about clean and be in control of your emotions, be in control of the market, not be hostage to this all over the place. So it's, I either make a decision on the opening or on the close. Philip says, would you buy the Dow and S&P at the current level? I would, and I am. I'm long the S&P call options right now. So does anybody have any questions on the methodology? Again, it doesn't matter what this instrument is. What I'm seeing is maybe a pattern. This is very early. I kind of get in very early because to me, the risk is, if I'm wrong, I'm going to know very quickly. I mean, if this thing just craps out today, tomorrow, and closes down here, I'll be out. I'll have tried something. It didn't work. Oh, well, this thing's going back down and, I'll get on something else. But if I'm right and I get in here and then it's up here, can you imagine? I'm going to keep adding to that trade. And I will take hundreds of thousands of dollars out of that trade if it goes to where I think it might. So that's what my objectives are. I'm looking at things, in a bigger context. I'm not trying to get every 10 minutes some 50-cent move, 20 times a day. You just can't win doing that. Sarah says, is it soon earnings for CRM? You don't care about that. You're still trading. So I don't know when the earnings are, and I don't care. To me, the market is telling me what the earnings will be when they come out, or whatever the catalyst is going to be. To me, I look at news and earnings and as a catalyst to send the stock where it looks like it could go. And if I start seeing price action again, this thing just craps out tomorrow and looks like this, I'll be out. I'll be gone. So I'll, dip my toe in the water. I'll see if this feels good. I'll see if I can get some traction out of here. And if it doesn't, I'll get out of that trade and move on. This is not about being perfect. Perfect is the enemy of the good. I'm just trying to find a trade that works. And sometimes you have to try 3, 4, 5 trades. And, if I take 5 losses of $2 each and I, lose $10, and then this thing goes on a $40 romp, I'll make all of my money on one trade and lose, on 5 trades. And I'll show that I've lost 80% of my trades, and yet I'm up a huge amount. So, it's the quality of your wins versus the quality of your losses. It's not the quantity. It's not like your winning percentage. If I sat here and said I won 85% of my trades, but my outcome in every trade was $1.25, that's not very impressive, because I just have to have one loss and I'll wipe out all of those trades. So I'm trying to take out moves in the market. I'm trying to identify, areas of resistance where you see this here and you start seeing this top. And so I'm just trying to take a piece out of the middle of a move like that. You see another top here. I'm trying to take a piece of the move like that. And now I feel like there could be a bottom here. There could be a double bottom. There could be a broadening bottom. I'm very early, but I think that is my strategic advantage. I see things very early. I try, Wayne Gretzky had this saying. So once a broadcaster stuck a microphone in, and Wayne Gretzky was a great hockey player, probably the greatest hockey player ever. And this broadcaster says, Wayne, you're not the strongest guy out there. You're not the quickest guy out there. How can you score all of these goals? Because Wayne says, I don't skate to where the puck is. I skate to where it's going to go. So, I've been doing this long enough where I can start visualizing, areas where, if things kind of grab an area of support, they could have some meaningful runs. And so this is what I look for. Where can I kind of get in right before, the horse leaves the barn? So this may be it. It may not. I put my toe in the water, probably made 60 grand today in the trade. So let's see what happens. Does this make sense to you guys? Or is this just, kind of Chinese or gibberish? No offense to the Chinese. Do you see how this might help you? This kind of process might help you in your thinking and your trading. So Mark says, perfect sense. Constantina says, yes. So Eduardo, thank you. DP, Derek, absolutely. Dennis says, yes, makes great sense. Karen. So this is what I try and do. I just look at price. This could be anything. Could be corn, natural gas. Doesn't matter what this thing is. I just look at the markets in terms of price. And so, I always said you got to look at the phase or the trend. And yes, this is, in a downtrend. But sometimes trends end. And when they end with a pattern. And, let's see if this is one of them. I don't know. I could be out of my mind and, it ends and goes back down. So we'll see. This is not kind of a perfect thing, but, I really like the way it closed today. Made a new low, closed on the high. So the market starts telling you, the buyers were in control today. So we went lower in the early session And by the end of the thing, the buyers were in control right at this area in around these lows. So we can only look at the signals from the market. And so, let's see what happens here. Again, this may just peter out and it may not amount to anything. And that's what I do. I'm always probing. I'm always testing. And then if something does get traction, and then I see that it's actually validating what I'm looking at, then I'm going to, see another reversal and I'm going to add to my trade here. And then I'll have a little hiccup here. And then, I'll keep adding to that trade if I see that the market is validating what I'm looking at. On the other hand, if the market just craps out and says, this is not going to go, then, I'm not going to, fight it and, I'll be gone. I'll just clean out my trade. So if you're interested in, what we're doing, I'm just going to put this in the chat box. Just shoot a message over to our team if you want to. If you want to trade along with me. So just shoot me an email and we'll kind of let you. Jan says, is the long-term support line for CRM at around 140? I don't know about that. So, again, sometimes when I'm looking at something, I start looking at the monthly. So I probably should have started here because this is what I do. I kind of work, from one timeline to the other. So you can see there's kind of like a long-term support line here. I look for where these things, now you can see you kind of snuck underneath here. And, so this could be a big, bad bear trap that, anybody chasing it under here, if it kind of comes above here, you could be, really caught with your pants down under here. But, we'll have to see if it kind of closes down here and then the next month it starts going down, then we'll see. But, one thing I always look for is energy, right? So even if this thing looked like it was going to still go lower, I would have a hard time shorting it because you can see that this thing has just gone straight down. And one thing, I don't know if you guys know about shorting, the market, but you don't want to be shorted in the hole. You don't want to be trapped there and then being caught on the other side of a short covering rally. You just, you don't want to understand the mechanics of that. So you always kind of look, if I wasn't there for the wedding, I don't want to be there for the funeral. That's not a good place to get short. I don't know if it's going to go up, but I wouldn't want to fool around being short this thing down here. So if it's not going to go down, there's a good chance it could go up. So now I start playing around with certain visualizations in my mind where you see this, you can see that last month we had a key reversal. We made a new low and closed at the high. Now, we're still in the middle of the month or, got a week to go, but if, by the end of the month, we're up here again, and now you have two key reversals right down here. This thing is, setting up for, what could be a monster move higher. Now we'll have to see. That's why I always wait till the close, because right now we're in the middle of the month. It really is undefined, and, now we could still, kind of go lower. But by the end of the month, if we're kind of trading closer to the high than the low, and you have two key reversals down here, now you're setting the stage for what could be, higher prices. And again, the energy is just such that, this is not going to take a whole lot to break out of here and, could go like gangbusters. So this is why, I just started getting so excited for all kinds of reasons looking at this thing. And I piled into the stock, piled into the options, and I probably will keep, adding to that position. If it comes in lower tomorrow, I'm just going to buy more. So I work backwards. I go from the monthly to the weekly, And now you can see that, we're on this funky little trend line here. Doesn't really mean anything. It's just a lot of support. Then it looks like it's a bottom. And now I'll have to see how we finish for the week. If we make this low and by the end of the week, we're trading up here, this is going to look pretty, so we'll have to see. That's why I wait for the close. Whatever time frame you're looking at, the only thing important is the close. Where this goes during the week, is going to be all over the place. But, then if I see where it closes, then I can make a risk reward decision. And so the close is very important. Everything in between is just a gamble. Let me see. So Elad, we have a live webinar format in the morning. It's called the Boiler Room, where I kind of go through all of the trades I'm looking at, for that day. And I think it's the best thing that I do because I can discuss in real time, what I'm seeing, what I'm doing, what I'm buying, what I'm doing for that day. And then I can also explain why I'm doing it. And that's the Boiler Room is Monday through Thursday, 4 days a week. And then I also do a webinar series on Friday. Eduardo says, what do you think about SLB? So I'll kind of look at that and then we'll end there. So again, SLB, is in an uptrend, and yet all of these key reversals and a big one yesterday. So sometimes the market just puts a stake in the ground, where it just kind of tells you where the risk is. So this is, again, what I call a key reversal. It, kind of dropped out of the sky yesterday, but it doesn't matter what it did during the day. It matters where it closed. And you can see, despite the fact that this thing got punched in the face on the opening, by the end of the day, the buyers were in control in an uptrend. So this is what I call a key reversal in the direction of the trend. So I've been expecting and do expect this stock to keep going a lot higher. I think this stock will be trading in the 60s in the not too distant future. So sometimes, you get into these areas where, the market just has to consolidate where it's been before. It doesn't just usually go through these areas like a knife through butter. It kind of has to spend time here, collect itself. And so this is just a consolidation zone. And I expect this thing to keep going higher. And then, we wait for these things to resolve itself. And what I mean resolve itself is like show where the risk is. And now I think you could buy it here, put your risk there, and safely assume that you're going to not get hit. So I think you have a 3-to-1 risk reward on this trade. You could risk $5 and make 15. So Eduardo, I think this thing goes nicely higher. I've been saying this for a couple days, and then, the market does its own dipsy doodle. And you can see now on the weekly, it's kind of even more definitive. So again, to me, everything starts with a pattern. So right there, this told us in fits and starts that this thing is going to go higher. This is your cheat sheet. So every time this thing goes down, it's a buy. It's an opportunity. So you kind of have to understand what is driving this market. So this is what I call the governing price pattern. So now once you understand a market is bottomed, it's going to go higher. And then you just try and get in sync by joining the trade. You look for your key reversals along the way. Made a key reversal, key reversal, key reversal. And here's another one pointing in the direction of the trend. You're welcome, Eduardo. So again, what I'm trying to do is we can go through many, many charts. What I'm trying to do is, convey a way of thinking. And so actually, this is another way you can understand my 4-step trading process. Here's a book that I wrote on my 4-step trading plan. I'm just going to put it in the chat box. And basically, it's a pay what you want. So you decide $5, $20, $100, whatever you want to pay for this information. And all the proceeds I donate to a children's charity called the American Childhood Cancer Organization. I probably donated over $35,000 to the ACCO this year from the proceeds of the sales of all my books. So check that out. Fiona says, do you have any comprehensive teaching packet for total beginners regarding the software? What is the acronym? So, Fiona, we basically, have traders of all backgrounds, newbies, very experienced traders. I've had people who've gone on to become money managers. So we actually have a testimonial from a guy named Prashant. Prashant joined me when we first started the Pattern Trader. And he learned enough now, from my teachings to now he's managing other people's money. So we have people of all backgrounds, Fiona. And so wherever you are, I hope that, whatever we do can be of value to you. So Tesla really hasn't changed, DP. I shared all the price trends yesterday, and today we have, I think, an inside bar. And so again, you can see that this is a very bearish stock, but we had a rip-roaring stock market today. The Dow was up over 400 points. S&P was up, 1.5%. And Tesla, barely budged, was actually down. So that's why I always say it's a market of stocks. Some are going down, some are going up. It doesn't matter what the general market's doing. And Tesla's in a very bearish phase where it's broken under support and it's likely to keep going lower. You had a little, mini, hookup, key reversal, small, I don't know what that means. I would like to see a little bit of a rally back to 180 in Tesla, but this thing's in a downtrend and will likely keep going down. And no matter what the market's doing, you got to keep selling this stock. But everything's about timing. It's already been on a pretty good run from 240 to 160. So the next time it rallies back to 185, if it does that, you can short that again. And it may just go tomorrow. So this is what I call a small inside bar, narrow range bar. And to me, you could put a sell stop under today's low. And, if it goes lower, goes below that, it could, this thing is this thing could give up the ghost very, very quickly and just disappear. So, I'm just looking for your comments here. Eduardo, you're very welcome. Thank you for all your support. So I think I'm going to leave it there. Like I said, there's an email in the chat box. If you're interested in what we do, just send us an email and we'll get in touch with you. Joel says, I see you have a program where you send out trades on golds. They're just a few trades, or is the gold? So that was a program of ours, Joel. I don't think, we're really continuing it. What I do as part of the elite program is that I send trades out on everything. And it also includes, gold. So, I tend to look at everything. And if there's an opportunity there, then, I trade it. Actually, silver is looking I was trading silver a couple of weeks ago, thought I was going to break out. It didn't, but who knows? Maybe this is the time now. Maybe this is the time now. So I was trading these SLV call options. So again, what I look for in terms of price action. So I think this is where, if you decide to not to kind of pound my own chest, so to speak, but I think I'm the best in this business at what I do because I've made so many mistakes. And, I've evolved my thinking because I used to, when I was a kid, I would go in, I would look at all the charts, I would study them. And then when I thought I saw them in the markets, then I would just say, okay, I saw this out of a textbook, and I'd put all my money in there, and then I'd wonder why I lost everything. And then I evolved into what I call a dynamic chartist. So what I do is I draw my charts, and then I see how the market reacts to it. Now, that little sentence, could save you 40 years of heartache, as it did me. And what I mean by that is sometimes, so what I do is I set up and I look at charts, and then based on what they do, I set up a certain expectation. And then I see if the market lives up to that expectation or goes the other way. And what I'm talking about here is that with silver, you kind of have this double top, then you kind of have this head and shoulders, and then more recently, you kind of cracked this neckline. So now I thought, okay, this is going to be, this was what I call a distribution pattern, where for 2 years, people were really just getting out, selling. And then once it kind of cracks the neckline, then this thing should start confirming that this is a big, bad bear pattern. And if this is a bear pattern, then this should go into a bear market. But, whatever I think doesn't really matter. The only thing that matters is what the market does. So when this thing tripwired this neckline, then I expect a retest. But after that, this is what I would have expected. If this was really negative and this was driving this thing, this is what should have occurred. But you can see that the market had, has other things in mind. And so now we've kind of formed this rounding bottom underneath this neckline. So again, once this thing got tripwired, it really should have just kept on going down. But the fact now that we're revisiting this neckline kind of like sends all kinds of alarm bells off me that, this is going to go the other way. Now we put a rounding bottom, and because it didn't go down, the only other way for it to do is go up. So sounds very simplistic, but if something's not going to go down, it's got to go the other way. And so now you're starting to see, just like CRM, where you went lower and now you're starting to come up through the previous bar's close. And this is already telling me that, I think I want to buy some call options in this. So the instrument in the stock market, if you want to trade silver, is something called SLV. It's an ETF. And what I typically do, if I'm bearish, I buy puts. If I'm bullish, I buy calls. And I bought a lot of calls like a few weeks ago. I made, some good money. I thought I was going to make more. I thought it was going to follow through, and then it kind of reversed here. But, I'm going to kind of check this out here. I'm already in so many trades and see how this thing does. So this is still a little bit confusing for me, and, I'm going to keep my eye on it. But anyhow, that was just, I look at charts very dynamically. Are they working? Is the market confirming what I'm looking at, or is it not? And that's how I think of trades. I don't think of trades in terms of money. I think of trades, is that trade working? In which case I'm just going to keep, going with it, adding to it, doing whatever. And if it's not, I'm just bailing out of it and moving on. Do you think the markets will react to the Fed meeting? I do, but they'll go in the direction that was indicated by the patterns. So I always said the market is a discounting mechanism. So whatever the Fed's going to say tomorrow, the market's already moving in anticipation of that. So I think, you'll probably see some sell-off, and then I would just buy into that. So, the market's spoken. The market's going to do what it's going to do. So you can see the S&P is trading right here. And so that's why I got out of some of my S&P today. I made 250%. I got a half my position. It goes, back to this trend line. I'm going to get out. I'm going to, I think, you get a Fed thing, you get a sell-off. I'll buy back in there, and then I'll look for that again. But doesn't matter what they say, the market is in an uptrend. So you could, even get a pullback here and then go back up. So it doesn't really matter what they say. The market is, got its formation. The market's already anticipating. And, I'm long all of these HYG options. So I hope whatever they say sends my HYG options, much higher. So I'm long the calls on this HYG. This is the high yield government bond debt. I don't really care what it is. I just saw this pattern right here. So that's why I bought it. And you can see now you got a little rounding bottom. Now you can see that we closed right today at the neckline. So I bought it last week. I saw these little mini reversals in here. I start buying the options, and now whatever they say tomorrow, I hope this thing goes north, because I'm locked and loaded on these HYG. So I hope whatever they say is going to be a catalyst to send this thing where it looks like it's going to go. So again, this is a perfect example of how the markets are ahead of the news. Whatever the Fed's going to say, the market's already been discounting it. So this is the HYG on a weekly. It's kind of a weird, complicated looking chart. It's this like reverse triangle. And you can see that, in the we're going to bang into overhead resistance, very soon. And then I'm hoping that, we can bang out of here. But I'm not in this, I got these call options that expire at the end of the week. I'm not in it forever. I'm just looking in it for a mini explosion where I can make 3 times my money and say, thank you very much. So you can see in the middle of all this weekly thing is this very subtle bottom. So if a market is bottomed, it's going to do what? So, it could bang into here and then go back down. But for right now, the momentum is going higher. And I think that it's still got a little bit higher to go. So I bought these things in anticipation of that. And then, tomorrow is going to be a very interesting exercise to see if I can make some dollars on this. DP, you are welcome. So I'm going to end it there. And I hope you guys, got some information out of this. Just again, it's all about risk and reward. John, you're always welcome. Marlene, you're welcome. Thank you. So I will see you guys tomorrow. Thanks, Eduardo. Thanks, everyone. Dennis, Rob, thanks. All right, Dwight, thank you.
All right, Mark, see you tomorrow.